Welcome to Main Financial Services. My name is Jamar Joseph. I am a tax accountant, tax preparer, and an investor um, located at 76 Mount Vernon Place, Newark, New Jersey. My phone number is 973-980-8692. That's my personal cell phone number. And my office number is 973-230-9003. Um, I am doing this video for you guys to give you a little lesson about taxation, especially for my clients. Some of my clients, they usually asking me, why is my return less this year? Why is um, you know my other friends making more or making less than I am? So I want to tackle one topic that might be the cause. It's not going to be the only cause, but that will be one of the factor to play in determining the person's refund. And for that, I'm going to give you the difference between itemized itemization or itemized deduction and also standard deduction. So standard deduction we say or standard deduction or claim um, to lower your tax income. So standard deduction usually be a fixed amount set um, that allows you to use as a deduction, to lower your income in terms of the amount of tax that you will be paying or amount of tax that you'll be eligible to pay. So standard deduction, we say it's a fixed amount. So that fixed amount usually different in terms of the taxpayer's status. So the status as far as single, as far as married filing separate, as far as head of household, as far as married filing jointly. I believe this year the standard deduction for someone that is single is about $12,000, $12,200, if I'm not mistaken. Um, for for head of household, head of household is about $18,250, and for married filing jointly is about $24,400. So that's what standard deduction is. All right, and versus deduction. Itemized deduction is not set, but it's varied. All right, it's varied through a list of items that you can itemize. All right, most likely if your income is high, so you normally the tax accountant is not going to give you the standard deduction, right? If you're a taxpayer with high income, and we consider a high income such as income from 60,000 to over half a million. So those are high incomes from 60,000, 100,000 to $500,000. All right, so the tax accountant will not give you a standard deduction because you're gonna end up paying more in tax rather than taking advantage or using the benefit of the itemized deduction. So the itemized deduction basically give you a list of items that you can deduct. All right. For example, from that list you could find real estate property that you own. You can find the tax. All right, real estate tax, real estate interest paid on the mortgage, debt. All right, bad debt, loss that you could also claim. Um, there's also a list of things that you can itemize. All right, so when you itemize all that, it will definitely go over the standard deduction. And when you go over the standard deduction, that's when you will use that amount, all right, to offset the standard deduction. So what's the difference this year, last year, or the years before? The year before, we said that the standard deduction were less. We observed that the standard deduction this year and last year has doubled. The year before, let's say it's 2017 and before. So the standard deduction for head of household, single, married filing jointly. So for single, I believe it was like 6,600. For head of household, I believe it was like 9,600, and for married filing jointly, it was about 12,000. All right. So if a person with an income of, let's say, $80,000, so definitely we know that that person will have to spend less than $12,000. All right. Or if the person is single, if the person is head of household, they will spend less than less. We know that for sure they will spend more than $12,000. All right. So once you pass the amount of standard deduction, all right, so you start getting credit. All right, you start getting credit. I believe for every $1,000 you get about $150. All right, so let's say in case the taxpayer made about $80,000 or over, and we are itemized for that taxpayer. So the taxpayer will start seeing a big, a big change in credit that they will be receiving. So versus this year and last year, it's changed drastically because the amount of standard deduction changed, and instead of putting at the level where it was, so they have double that amount. So that made a major change, all right? Because that person now, in order to claim, in order to start receiving credit, so that person have to surpass that amount. So that amount is already high already. So the credit receiving is going to be very, very, very low, and that's why most people, especially people who are homeowner, so they seeing not big difference compared to the year before. The year before, a homeowner did not really have to have a dependent. If with just the credit of the home that you can claim, will make your, and that could make your refund be very, very content. So this year, um, it's changed. It's not the same. So again, um, I was giving you the example of the homeowner. Yeah. So with that, let's say that the homeowner pays a property tax $10,000. All right. Also, interest paid on the mortgage is about 12 or 14,000 dollars. So with those two, credit itself, so the that homeowner already have about $24,000 versus $12,000. We're talking about 2 years before and before. All right. So that homeowner already attain credit. All right. They already accumulate credits that can give them a high refund. So this year it's not the same. So this year that homeowner will have, and will have to start at a higher amount, and that amount can be $24,000 if that homeowner is a married filing jointly. All right, that amount can be $18,000 if that homeowner is a head of household, or $12,000 if that homeowner is single. All right, so you have to start from that range of the standard deduction in order for you to start seeing the difference in the refund. All right, and that refund will be very, very low because because you're starting you're starting high. All right, so in that case you're gonna start seeing the refund affected by, because of the standard deduction that has increased. All right, so being that the standard deduction increase doesn't really help you, it doesn't really help us. All right, it doesn't really help us at all because that increased the amount for us to start getting a little bit of credit. So what's the advantage of standard deduction? Well, the advantage of standard deduction is that you know, if you're married, if you're single, if you're head of household, so they already give you a set amount. So if you make less money or if you spend less money than what they know, what you could have itemized, so it's good. You go with the standard deduction. All right. So with the itemized deduction, yes, it's an advantage. You could claim your debt. You could claim all the other expenses such as your interest paid on the mortgage. You could pay your tax pay on the property. So all that you could itemize and add up, and also certain employee expenses. But this year there's no employee expenses. You cannot add employee expenses on your itemization form. So with that, that's what's making people that's what you have to understand. That's what you have to understand. So why or what's make your refunds lower when you're trying to compare your refund with another taxpayer. All right. But I would strongly advise you not to do so, not to compare your refund with another taxpayer, because every taxpayer is unique on their own. You know, you can be unique based on your status. All right. I'm unique on my status, and you can be unique on the amount of income that you make. All right. So just because you have a child or you have a dependent, and I have two dependents, doesn't mean I could get more than you. You could have one and you make more than me. All right. So there's other factors plays into account. So the amount of exemption also claim on your tax, all right, also play a major role in determining the amount of refunds. So as long as you understand the difference between standard deduction and itemized deduction, so that's one part, all right, of understanding how your refund will be. All right. So I hope you guys understand that little lecture I just gave you about understanding the difference between standard deduction and itemized deduction. And thank you very much. But if you have any questions, please feel free to write it down in the comments. Please feel free to call me. Feel free to email us. And every week we'll try our best to give you, a topic on taxation. All right, we'll give you a topic on taxation, which will enlighten your understanding and enlighten your education on tax. Once again, thank you very much, and we hope that was very helpful for you in understanding taxation, and hopefully you don't give your tax accountant a hard time this year. Thank you.
Main Financial Services. Faut songer que le chita dans 76, Mount Vernon Place dans Newark, New Jersey, tout pareil pour le fil taxe sur le principe internal revenu service pour qu'à gérer finance ou bien dans yeux la loi. Il est 973 980 86 92 Jodia pour qu'à son rendez-vous taxe dans Main Financial Services. Il y a un service investissement spécial pour tout jeune qui dans vingtaine avec $2000 pour qu'à payer par Mosso. Main Financial Services garantit un return qu'a fait qui en comptant en quelques années. Il est 973 980 86 92 mandé pour Jamar Joseph pour un rendez-vous d'investissement. Dans Main Financial Services, il y a tout service notaire public, life insurance, MoneyGram, sports agent, investissement dans real estate, réparation crédit, traduction documents, service immigration, enregistrement légal pour business et puis tout un bon service transportation. Main Financial Services, 76 Mount Vernon Place, dans Newark, New Jersey. Téléphone 973 980 86 92. 973 980 86 92. Avec Main Financial Services, toutes affaires réglées.